Welcome back, everyone. Thank you so much for joining in. We are again back at it. We're having a live market session and very excited. The title is the Dual Shock Session. We will be diving into jobs and inflations. We're having some news releases coming in, as you could see. We have employment change, we have unemployment rate, and then followed by the Core PCE price index month to month. We'll also have the consumer sentiment and inflation expectations. So very excited here. Today we're just going to be concentrating on breaking down two major economic releases that come out at different times. So the key here is the timing. How do I handle this from a professional bird's eye view? How do I see both of these fundamental news releases affecting, and how what steps do I take? So we now know that the federal government, U.S. government lock has been stopped, and now things are back to business. We also know that currently we have some meetings in Asia. We have some global conflicts continuing. We have Q4 coming in. There's a lot of stuff, and we have a lot to talk about today. Now, official websites, you might want to open the US Bureau of Labor Statistics, and also the saved it here, the Central Bank of Canada statistic website. The links are all in my Telegram. You might want to go check them out right before we start. So With that being said, Core PCE is very important. If you're lagging, you could go check out some of my videos. We've broken this all down previously, and I've been able to walk you through some successful steps, how to implement some of my strategies and all that stuff. Now, we're not just going to look at numbers, right? We're going to break down how the market absorbs these shocks, how the narratives shift, and how traders position themselves between, the first and the second wave. So I expect some kind of volatility coming in. So whether you're a beginner or an intermediate, it doesn't really matter, right? Even if you're an advanced trader, I believe that constructive thoughts, questions are very helpful to maintain the momentum going in. This is going to give you a much deeper understanding of how real fundamental data interacts with price action. I have my naked charts well aligned. I'll be focusing on the USD and the Canadian dollar. Now, so settle in, guys. Please, we have a few people coming in. Settle in. I'll be guiding you through the data, how to interpret it, and how to anticipate market behavior. So, you could avoid some common traps traders fall into during high impact economic events. Now, it would be really nice to know where you're coming in from, where you're joining in from. So feel free to get into the chat. We have a live chat and ask questions. These live streams are tailored for my community. If you haven't yet checked it out, go to my Telegram. You want to look at some of my videos that I've been releasing, and I have a lot more for you. So feel free, get into the charts and ask questions. It might even not be connected to trading. It might have to do with some of the methodologies that I've used or you've heard, or some stereotypes going out there for the industry. You want to find out, this is a place to be, guys. So without wasting any time, I'm going to start with just a quick framework, right? We have alt season here at about 35. So we had that push down by the crypto side. We had Bitcoin falling under beneath 100,000. We've seen the impact of that, and that's the beauty about here. We're not just looking at the majors. We are looking at financial markets in general. How does correlative analysis affect, say, for example, sentimental analysis? We know that we are in Q4. Seasonal tendencies are in. We have the correlations here. We have the market. We have forex. We have indices, bonds, energy, metals, grains. We can see this, and we could also correlate that with our high performers. So this is just a space for traders. Doesn't matter, beginners again, or you're just getting started or finishing off, you're an advanced. This is a place to be. Ask all these questions. I'll be more than happy to answer. So I'm going to start with structure. First, we'll prepare for the Canadian jobs, right? This is what starts. We have employment change and unemployment rate. And then we want to understand what the labor force survey measures. And this is a website here, right? Release schedule, labor force survey will be today. So as you can see, I'm on the official website, and we have upcoming releases. Okay. All right. And once that comes out, we have about 2 minutes. But anyways, once it comes out, we'll be able to dissect that. Why does it matter, and how typically does it affect all these Canadian pairs? We have Canadian USD CAD, right? OTC, we'll remove that. We could also add a few more, like the CAD JPY, and also the let's see, the EuroCAD. EuroCAD is a nice one. EuroCAD. Where are you, EuroCAD? EuroCAD. There you are. Now, we could see volatility already trying to kick in. 30 seconds, 30 minutes. All right, after that, we'll transition into the US session preparation. I have my assets as well there, my instruments. I'll be focusing on core PCE inflation and the University of Michigan Consumer Sentiment Index, right? They call it that. So interesting to see sometimes how we wrap up a Friday going into the weekend, and how I'll be able to see that. Now, this staggered structure where we have one form of fundamentals coming in and the other, we have that in 1 minute, is what I call a dual wave volatility. Each release sends its own shockwave into the market, right? And the second wave tends to reinforce it. Either it could reinforce it, it could reverse the particular instrument that you're looking at, or even sort of just exaggerate the first. And usually we'll be seeing some very wild moves. We could have exhaustion candles coming in. If the market is at extreme highs, we could see pullbacks, and it can just disorganize your previous analysis. So we want to be keen on that. All right. Understanding how these waves interact is a skill most retail traders never learn. I kid you not, guys. If you're used to seeing weird candles and all these things, asking questions, there we have it, guys. We have volatility coming in, and as you can see, I'm very composed. I'm not rushing anything. We have pending orders. I refresh my economic calendar, and we'll be able to move on from there. All right, guys, labor force survey. Before we even think about pressing the buy or sell, or even trading any Canadian currencies, you need to understand something. You need to understand what the labor force survey is, right? Let's break it down. This is Canada's official monthly measurement of employment dynamics. As simple as that. How many people are working? How many lost jobs? How many gained jobs? And what proportion of the labor force is actively participating in the job market? I don't know if that makes sense. Okay, so there we have it. 53.6. Previous was 66.6. The forecast was expected to be minus 1.5. We could see a bigger one. So employment change here is a change in the number of employed people during the previous month. Okay. Actual greater is good for the forecast. Now, we clearly see that it has reduced. We'll break that down. And unemployment rate as well, which is 6.5. Now, unemployment is a little bit tricky because it's a percentage of the total workforce that is unemployed and actively seeking. So these guys are seeking. Now, if we go quickly here to the latest release today, and let's try to look for it. Major economic releases. Okay. Let's see this. Right, we have data, statistics, and let's see, most popular. We apply that. You could play around with the website. It always has good stuff, and we want to look for the surveys and information. Surveys, let's see, subject, data, analysis. Where is that? Where could that be? Okay, where could that be? Let's look for that very carefully. Or you could just search that labor. Search for that. and we have some kind of labor statistics. All right, we have some labor statistics. All right, let's go home. Usually it's the indicators are found at the start. So we have major economic indicators. You could go through there. And all right, today's November. So this might take some time to, by the time it comes in here, we might have missed it, right? So there it is, released today. There we have it. Beautiful. So we have unemployment rate at 6.5 and 21 million, which is 0.3%. Now you could see the difference. This just shows you a summary, right? While this website, the official website, actually shows you the details. Now, if you go into each of these, you'll be able to break down what's really going on in Canada. Employment increased by 54,000, which is 0.3% in November, driven by gains in part-time work. The employment rate rose 0.1%, points to 6. So overall, this is expected. We also have employment increases rose by 54,000. That's regurgitating. Part-time employment rises. So this is nothing new. Towards the end of the year, we have numbers going up because economies are booming, and we pretty much don't have any issues with that. Now, why am I talking about all this, guys? Why am I bringing this up? Here's what key metric means. These are what the key metric means. Employment change. When you have time over the weekend and we're going through our pre-market analysis, I want you to go through this summary here and try to understand really what's going on. What is the economics from the micro perspective and the macro? So this tells you how many jobs were created or lost, right, compared to the previous month. A positive number means more good jobs, right? A negative number simply means jobs were lost. That is the employment change. So big drops usually weaken the Canadian dollar because they signal slowing economic momentum. And that is what we have here. Employment change was 53.6 thousand. Let that sink in, right? It's not a big drop, all right? It's still positive, right? Now, when you look at unemployment, 6.5. Again, when you have time, go through the unemployment rate falls to 6.5. Do we confirm that? Yes, we do. Now, this is the irony. When you look at Forex Factory, this is what confuses so many traders out there. When you see green, you think it's a positive, right? But understand that it was previously 6.9%. The forecast was 70. So this number 6.5 did not only come below the forecast, but also the previous. And that is where many of you go wrong. You expect a move to go in one direction, but it goes in the other, in the opposite. And you ask yourself what really happened. So here it is. Unemployment rate is the percentage of people who are actively looking for work but can't find it. Right? If unemployment rises, it often signals economic softening and the currency tends to weaken. So, in this case, the rate fell to 6.5%, which is a good sign, right? So, if unemployment rises, it often signals economic softenings, right? So, we understand that it's pretty good because it was low. However, it was much lower than the previous, which is actually even better. Now, when you look at participation rate, you start to look at the infographics here. I like to look at them at the right. You see the infographics here? Yes, participation rate shows how many people are actively in the workforce compared to the total working age population. So a falling participation rate can also distort unemployment numbers. So you always have to compare. Now we also have quality of jobs. When you start to look at individual states, look at employment gains led by Alberta, you look at spotlights, lower perceived job security. So you have to go through this. If you do it 1 to 3 times, you start to grasp and understand how the Canadian economy is actually doing. So by understanding these components, you already become very sophisticated, right, than someone who just only waits for the headline number. Okay? For example, full-time jobs versus part-time jobs. Full-time gains show economic strength, but part-time gains can only signal seasonal or even temporary hiring, which is, to be honest, a big debate, right? Markets react differently depending on the mix. And this is the key of these live streams. You have to be able to understand what exactly you're doing, all right? And leave the bigger analysis for weekends. Get time and go through these data points, understand them. You could actually plot graphs. You could have your we have different tables here, like the labor force characteristics by age group and gender. This is a very good one for seasonality. Yeah, and so many others. So that is about the dissecting of markets. If you have any questions, you can always come to my Telegram and ask. I'll be more than glad to help. Now, if we're looking at the market behavior, how is the market behaving? I like to use bar chart, so you could quickly go there and look for top gainers, especially in the Forex industry. We have the performance leaders, and I want you to look for the Canadian dollar. It should be somewhere here. Yeah, Canadian dollar. And you could just see the change on the right. Look at how it has risen or fallen, right? And compare that with a previous session, for example. Have that all mapped out on an Excel sheet and start to understand your instrument. Don't hop from instrument to instrument. That is how professionals actually do it. If you're scalping, now if you're going long term, you might want to have a 3-week time frame, a quarterly time frame, and also this insight will be able to help you make decisions on whether to exit, whether to move your stops, to take profit, etc. Now let's talk about how the market usually reacts to this data. CAD pairs especially. You see we have the USD CAD. So USD CAD often shows exaggerated moves. Whenever we have exaggerated moves, really we don't have anything serious today going on. But often we have these crazy spikes, right? In the first minutes after release. That's why we have a dual shock today. So depending on the next PCE data, we'll be able to have a nice signal. Now, this chart is dominated by algorithms. That is no-brainer by now. We have large institutional orders coming in and liquidity imbalances. So what most traders don't realize is that the first move is not always the real move. All right, let that sink in. If you've been here for a while, you clearly understand that the first 5 to 15 minutes need to be taken with very much care, right? You need to manage your risk. I talk about the loss compensation system. Go check out the martingale. I actually have it here. Put your deposit, what you really want to risk. On pocket options, we have a beautiful tool here that could help. You could play around with the percentages, and you don't have to go through any kind of hassle, is what I'm trying to say. So sometimes the market spikes one way, it captures liquidity if you have your zones very well drawn, all right, you have your zones drawn well. Sometimes you could have spikes in the wrong direction and then the real move. Sometimes it captures liquidity. So it's very important. Perspective is very important. Now, if you're looking at institutional traders, right? What are they looking at? If you've been in some of these institutions before, the first questions are usually goes as follows. I used to ask myself, does the data beat or does it miss expectations, right? So the data that we've just broken down, right? Briefly, remember before the release, I had my forecasts. I had the sentimental forecasts as well. I've been all over Twitter. That is X, formerly Twitter. I've gone through some of the traders I know. I've done analysis on different currency pairs as well, what their governments are up to, what their central banks are up to. So in my mind, I ask myself, is the data, does it beat or does it miss expectations, right? And then very importantly, on my Excel sheet, I compare, ask myself, how does it compare to the previous month? So here we do have, oh, by the way, there's another nice tool that has that infographic. But anyways, you could get it on the same website. So you could see the monthly change has been 0.3% for unemployment rate. Okay? All right? So, unemployment, oh, hold up, what's going on here? Oh yeah, so we have 0.3% increment on the employment level in Canada, whereby we've had 21 million jobs added, while unemployment rate has fallen 0.4 points down, right? So we had 6.4% decrease in unemployment rate. So does the third one would be, does the underlying quality confirm or rather contradict the headline? Now, once you do this over and over, you'll be able to quickly make an informed decision when you see those data numbers coming out. So, for example, if employment change comes in positive, like today, 0.3%, but full-time jobs, right, fall by a significant number. Full-time jobs. We have part-time employees rising by about 63,000, which is 1.6% over the past 3 months, right? Part-time employment has increased at a faster rate, which is 2.7%, than full-time employment. So, oh my goodness, it's sweating. I'm sweating here. It's getting hot. So I don't know if you kind of understand where I'm coming at. So we have employment change coming in positive, but full-time jobs falling by a significant number. That's actually a weak report. It's just disguised as a good one. So these are some of the things we professionals look at when we're breaking down fundamentals. And as you practice, as you continue to analyze the market, this becomes very interesting. So the key lesson here is, please don't trade the headlines. It comes down to, don't just trade these numbers. Don't do that, right? You need to trade the interpretation. So that's why I'm staying calm. You see, I'm not even entering. I'm not getting into any positions yet. I'm calm and waiting for the chart to form the critical structure that I'm looking for. My highs, my lows have already been plotted, and I have a game plan. Now, Canada release, what kind of expectations do I have? So once the release time has come and we have the data, you need to identify your key levels. This is no-brainer. Ahead of time. Look for recent highs. If you're scalping, you could use the hour chart. Okay. Look for recent highs. All right. Look for recent highs. And you could plot all that. Okay. Plot them out very well. Compare with the higher time frame, maybe the 4 hour. You want to get clean supports. And understand these are just lines. This is not financial advice. Having a line doesn't really doesn't confirm that you're a professional. You're going to make money, right? These are just preliminary zones, and I've taught this a lot. Go check out my videos about zones. I have a full educational series on zones alone. Okay guys, so once you've plotted your levels, you look for recent highs and lows, areas where liquidity will sit, and zones where market makers may want to trap traders. So when you look at a chart like this on the 4 hour, you want to look for a zone where you think there's a lot of consolidated liquidity. And we've seen this fake out. Price came back into this support zone. This is clearly a support zone. So we're having some consolidation, and price looks like it wants to head over here. Many of you look at this as a fair value gap, and these so-called order blocks. I think that is all trash. However, you could come up with all your kind of definitions, whatever works for you guys. We're not here to prove points. We're here to make money, right? So once you've identified that, and you assume that price will come here because the Canadian dollar is actually strong, but that is one-sided. We're coming to the USD. So once that is set, in news events, you have to understand that the market behaves like a magnet, right? It tends to gravitate towards levels of high resting orders before the release. Now, in this case scenario, we haven't seen such of big moves. So that's why you often see the price drifting toward, say, a major level right up here, right before another shock comes in. All right. So you might want to ask yourself, Canadian dollar strong, but why isn't it not going down here? For the Euro CAD, we had a good move, right? We had a very good move. Right. Where is this? 1 minute. Okay, we've been having... You see, this actually confirms that the Canadian dollar is strong. Now, if you look at the performance and look for the Canadian dollar, Japanese, yeah, it's all strong. All this is strong. Yeah, and look at the Australian dollar. Let's put it here. So once you've done all that, you know, you're comparing, you're understanding, you're trying to, and don't forget where we are, guys. Very important is the timing as well. I always say this. Now, if you look at the time, world time, look for the world clock, and you want to understand where you are at the moment, and we can identify that we are getting into the sweet spot. New York is just 8 minutes. At 9 o'clock, you want to get into all your positions. And so, as you can see, I have very, very strict rules. I understand where I am, and I'm always asking myself the same questions. What time is it? What's happening? This comes with experience, all right? The more you practice, the more you will understand what to do. Now, in news events, there's testing orders. We have a lot of major levels right before data. So when data comes out, you think of the market as reacting in 3 phases. We have a shock. We have the first spike, which is very, very quick. Now, if we don't have that, we have that assessment stage, which is about 2 to 5 minutes, which I call digestion, right? Absorbing. The market is absorbing. Informed traders are breaking down all the data. Now, I just broke down a little bit of part-time and non-part-time and all this stuff, but there are algorithms that are breaking down, crunching all this data, coming up with very informed decisions, right? You have departments, you have teams out there before the real decision, which is the third part. So the real move always happens later. Most retail traders lose money in the shock phase because they chase candles, while professionals just wait for the decision phase. So in this case, for example, we know CAD will come down. All right. So if you're scalping, I don't expect you to think of any buy for USD CAD. I don't expect you to look for any buy on the Euro CAD and also any buy for the Australian dollar. However, we might get some retracement, which is perfectly fine. If you're a technical guy, you could bring on all your indicators, you know, the Fibonacci's and all that stuff that I teach. Now, after the release, we dissect the reaction. You know, did the market behave rationally? Nope. Ask yourself questions like, did it really behave in a way that justified the numbers? Nope. Did we see a fake out? Yes, we saw a fake out. This was the fake out. Did the movement align with the fundamentals? Not really. On a bigger macro scale like this, not really. So we expect a very nice retracement all the way down, if I'm not, depending on the US data release. Now, from a daily, you might say that the candle has tapped into the bigger time frame zone right here, the distribution zone, or I don't like these phrases like order blocks, but if you've been here for a while or you're an advanced guy, you probably know what I'm talking about. So once you've asked yourself those questions, you move back down to the 30 minute, and so this is where traders pretty much sharpen their ability to read sentiment. Okay, you could go and check out what is going on from the sentimental side. All right, and you could just check out for the forex market map. You want to look for Canadian dollar. There we have it. All these are green, except the Canadian Australian dollar. Canadian Australian dollar. All right, so the inverse is correct. Yeah, there you have it. All right, now when it comes to the next news, this is at 6 p.m. Unfortunately, we'll not be here to make that decision. However, when you join my channel, you get the move. So this was a nice move, guys. This was a really nice move that was expected, and yeah, we haven't capitalized on that because we're still monitoring the situation. Now, when we move on to the second part, I expect you later on to use the BLS website. Look at the US Core PCE consumer sentiment price index is there. Try to understand the numbers. Remember what I mentioned previously. Expenditures price index is a Federal Reserve's preferred measure of inflation. It reflects how prices change across a wide range of goods and services, excluding food, energy, which are very volatile. Why does it matter? As mentioned previously, because the Fed uses this number to help determine interest rate policies. Right? Low, stable numbers support dovish policies, while higher numbers force the Fed toward tightening. Okay? There's a summary. You might want to go through that as well. So we'll have different numbers. All right? And this particular one is going to be very, very interesting because, you see, when Core PCE comes out, say, at 0.2%, okay? seasonally adjusted changes. You could see this by item. When it comes out, for example, at 0.2%, markets interpret it as controlled inflation. So neither too hot or too cold, but even small deviations from expectations can surely move the market, because inflation is central to monetary policy. Very important. And you could also identify those items that are key to that particular economy, right? We have food, we have energy, fuel oil, and look at those changes, right? The role of consumer sentiment, that university called the University of Michigan Consumer Sentiment Index, it measures how confident households are about the economy. All right, this includes expectations about jobs, the cost of living, spending, and future inflation. All right, why does that matter? Is because consumer expectations shape actual economic behavior. See, if people believe inflation will say rise, they just tend to accelerate spending, which can actually push inflation higher. So when sentiment rises, the dollar tends to strengthen. When it falls sharply, risk assets often drop, because consumers drive over 2/3 of the US economy. So it's just a battle of games, a battle of economies, Canada and the dollar. We're comparing now. All right. Now, the behavior strategy, see, as we approach the US release, your job is similar to the Canadian prep. Very similar. Your pre-data ranges, not liquidity, and prepare your volatility. As simple as that. Once it's released, we analyze, we check out the interplay between Canada, we check out the seasonality, the performance leaders, and you begin to see how these economies connect, how sentiment shifts across borders, and how markets actually reprice risk. All right? So, guys, this has been a very compacted, educative video. It's not meant to confuse you. It's meant to open your mind, get you exposed, and start looking at the market the way I see it. Now, you've seen that pullback, right, in the right direction that we expected, and you could actually place a trade right down here. All right? You could bring your Fibonacci here, and let's see. Okay, so let's see something. Let's see something. All right. 0.5, 0.38. All right, there. That could be a nice sweet spot. That could be a nice sweet spot. That could be a very nice sweet spot. So understand the components between each release. I expect a sell right there. Price often misbehaves in the first minute. You wait for the structure, so that all will be at 6 o'clock, and then you can make your decisions. Now, guys, we are past time. Please move to the Telegram community, because I'm just waiting for those key news releases, and only then I will be able to send you guys some signals. I hope this was very interesting. Make sure to hit the like button and subscribe to my channel, where you'll be getting more of these very interesting insights. All right, we have Ikinochidero, right, asking, how can I open trade in pocket option in demo? Very easy. That's a very nice question. If you're still around, very simple. Just all right, just go to the website. I have it in the pin messages in my Telegram. You want to go to your profile here, right? You want to say log out. If you go to log out, right, you sign in. Okay, you sign in, and there'll be an option for a reel and a demo, right? The demo is right just below the reel. And actually, that's a good question. If you're out there and you're just starting out, you want to use, you want to paper trade, right? Take some time, understand all these definitions, ask questions, and when you're confident, you can get in. Usually I just send the signal, the expiration time, and just a quick detail of what I used, which indicators I used, but you kind of get the point, right? So depending on all that, let's see what's happening here. All right, yeah, price is going as expected. All right, now this would be a perfect entry. Yep, this would be a very nice one. I like the pullback on the 1 minute. It's a very nice pullback all the way up, and we should get in. If you have time, you could put a expiration for 3 minutes and a sell order. But in this case, just to show you, I'll put a 15-second. All right, I'll put a 2% here, a 2%, and a sell. Let's see how that works. The reason being is the pullback was very insane. I like the pullback. All right, we might. Okay. All right, doesn't matter. Such pullbacks usually have very good stretches, especially if you're right. Now, looking at the time. Okay, New York is in. We expect. Right, then you just go to the martingale strategy and increase your risk, say 3%. Say you have about $12,000 here quickly. $12,000. You have the fast stake. Wait for it to load. $200. Next will be $596. Let's see. We have percentage. Let's see, 2%. What would that be? All right, let's say 3%. 3%. All right. Let's see how that plays out. So if you're used to martingale strategies, martingales are also very, very good. This should be able to work out. Come on. All right. That is also fine. We have 744, which is not bad. So if depending on what strategy you're using, we talk about all this. Don't want to rush, just want to show you a glimpse of how I trade. Now let's get the ball rocking. Let's move to my my channel where you'll be expecting signals. I need to move to my bigger screen. So see you guys. It was an amazing session with you all, and every Friday we'll be having a stream. So stay safe out there and have a great weekend. Remember to protect yourselves and manage your risks. Cheers.